Hi folks, welcome to another episode of Who Said What. I'm your host Kashish Kapoor, and if you're new here, here's the quick context. The idea is simple. We pick the most interesting comments from business leaders and break down what's really going on behind them. This builds on a newsletter that we run called The Chatter by Zerodha, where we track what company management say in their earnings call or TV interviews. But instead of looking at those comments in isolation, this format zooms out a bit. We track one theme across companies and over time see how the story evolves. The goal is to connect the dots and understand deeper shifts in shaping an industry. For today's episode, we wanted to know, how are Indian pharma companies planning to make money off of the GLP-1 trends? On the evening of 20th March 2026, hours before Novo Nordisk's Indian patent on semaglutide formally expired, Natco Pharma announced that its generic vial would sell for 1,290 rupees per month. Now, the original drug has been going for roughly 16,000 rupees. By the next morning, 6 more domestic firms had piled in. By the end of the week, 13 companies had launched 26 brands. Within a month, more than 50 were on the market or in the queue. Now, the interesting question isn't who launched, because almost everyone did. The interesting question is what each company is actually doing. Whether they're making the drug, selling it, both, or simply renting out the distribution to someone who has already done the harder work. The same molecule, the same patent cliff, the same 25 crore strong pool of potential patients in India, and 6 very different ways to make money off of it. Over the last 4 quarters, we read through earning calls of 27 listed Indian pharma companies, more than 140 calls in total, to map what each one is actually up to. Here's what we found. Now, a note on the price before we get there. India's GLP-1 market was worth about 571 crores in 2024. By February 2026, on a rolling 12-month basis, it jumped to 1,450 crores, with the anti-obesity slice alone more than doubling. But that figure is the market that innovators built, because until 21st March, semaglutide was still on patent. So almost all of it was Novo's and Eli Lilly's branded money. Now, 3 estimate of where it goes from here is, first, Systematic sees that this is a 5,000 crore incremental opportunity across India, Brazil and Canada combined over the next 12 to 15 months. CareEdge expects India alone to reach 5,000 crores by 2030. And Jefferies, which is more bullish, sees a market north of $1 billion or 9,000 crores in India. Now, set against those projections, what the new entrants have actually booked is almost nil. Cipla's Yorpeak did a 14 crore in its first month. Eris's liraglutide, an older off-patent GLP-1, does about 1 crore per month. Every generic semaglutide launched only in the last week of March, so a full quarter of post-launch sales simply doesn't exist yet. So what follows in this whole story is a description of strategy and not of the profit pool that has already formed. Let's start with what the drug actually does, because that's what explains the gold rush. GLP-1 is a hormone your gut releases after you eat naturally. It nudges the pancreas to put out insulin, tells the brain that you're full, and slows down how quickly the stomach empties. Drugs like semaglutide are engineered copies of that very hormone, tuned to last a week in a body instead of a few minutes. Take 1 injection a week and your appetite quietly shrinks, your blood sugar steadies, and the weight comes off, often 15% of the body weight or more. Now, to know more about this, we also did a podcast with Ishmohit on our channel earlier. You can check that out as well. Here, there are 2 innovators now. 2 foreign drug makers built the entire global GLP-1 market. Novo Nordisk is a Danish company which makes semaglutide, the molecule that everyone is now copying in India. Novo sells it under 3 brand names: Ozempic, Wegovy, and Rybelsus. When people say Ozempic, colloquially, they usually mean semaglutide in general. Then there's Eli Lilly, which is an American company that makes tirzepatide, a different molecule that works on the same biological pathway but has shown stronger weight loss results in trials. Lilly sells it under one global brand name called Mounjaro. And in India, Lilly has partnered with Cipla to make it under a separate brand, Yorpeak. Now, in all of this, what going off patent actually means. A patent gives the original drug maker an exclusive selling window. When it expires, the industry calls it loss of exclusivity, or LOE. Other companies can now legally make and sell copies of that drug called generics. Semaglutide's Indian patent expired on 21st March 2026. Tirzepatide's runs until at least 2030. So semaglutide is now a fair game. Tirzepatide still legally can only be sold by Eli Lilly. Now, there's a distinction here between pens and vials that you must understand, and why the devices matter here. You see, semaglutide is an injection a patient takes once a week. How it's packaged changes the economics entirely. A vial is a glass bottle of liquid drug. To inject it, the patient or the nurse has to draw the right dosage into a separate syringe. Vials are cheap to manufacture but can be very fiddly to use. Dosing errors are very common and most patients won't really self-inject from one. A pen is a preloaded injector with a cartridge. The patient turns the cartridge to a prescribed dose, presses the pen against the skin and pushes the button. It costs 3 to 6 times more to make than a vial, but it's dramatically easier to use. Now this distinction really matters because it helps us understand the different bets that people are making. So the first bet is the default play. Show up on 21st March with a branded generic, fight for share through Salesforce and ride the volume. Almost every Indian pharma company took some version of this bet. Sun Pharma, Dr. Reddy's, Lupin, Zydus, Alkem, Natco, Cipla, Glenmark, Torrent, Mankind, Eris, everyone. The interesting thing is that nobody priced it all the same way. Within 10 days of launch, the Indian generic semaglutide market had split into 3 distinct price tiers. The cheapest tier was vials. Natco opened at 1290 rupees a month for a vial. Glenmark's launched even lower at 325 rupees a week. These prices are roughly a tenth of the Novo Nordisk's original drug. The trade-off here is that patients can't easily self-inject from a vial, as we discussed earlier. So this tier rarely only works in clinics where staff can manage the dosing themselves, or with a small fraction of patients that are comfortable handling a syringe. The middle tier was affordable pens. Here's where Alkem, Zydus and Natco's own pen device came in. This was in the range of 1800 to 4500 rupees per month. Same molecule as the vial, but in an easy-to-use pen injector. This is where the mass market volume will likely settle once the price competition has done its work. Then comes the premium tier. It was the high-end pens with patient support wrapped around them. Dr. Reddy's at around 4200 rupees, Sun Pharma's at roughly between 3000 to 7500 depending on the dose. These companies are betting that better device design, a branded experience and patient education can justify a premium even after generics have flooded the market. So there's the same drug, that's 325 rupees per week and 7,400 rupees a month. Different patients, different doctors, different settings. The honest part of this bet is that everyone running it knows exactly what it looks like. It's crowded, it's loud, margins are going to be thin within the first few quarters. So why do we run it anyway? 2 reasons. The market is so big that even a thin slice is real money. And being absent on day one means being absent forever because Indian doctors tend to stick with whichever brand they wrote first. That's why Lupin, Dr. Reddy's, Sun Pharma all set internal targets to rank top 3 among generics from week 1 itself. The early post-launch read suggests that Torrent Pharma has actually surprised everyone. The single decision that won it that share was launching the oral version along with injectable, something that no other generic did at scale. In rupee terms, even Torrent Pharma's standout is small, about 17 crores of monthly sales against a quarterly revenue base of roughly 3,000 crores. For now, the point of this bet one is defensive. Don't let the competitor own the diabetes prescription pad. The money can come later. Now on to the counter bet, that's the bet 2. If the generic market is going to be a knife fight at 1290 rupees a month, why be in it at all? Instead, partner with the original drug maker, sell their actual product at a premium and lean on their global data and their device. Emcure took this bet the hardest. In late 2025, it signed an exclusive deal with Novo Nordisk to launch Poviztra in India. Poviztra is the same drug as Wegovy, which is Novo's semaglutide for obesity, just sold under a different brand name in India by Emcure. The molecule is identical, the device is also identical, and the data behind it is the same global trial evidence Novo has been collecting for years. The logic is straightforward. After the patent cliff, you have 17 generic semaglutide brands fighting for shelf space, and none of them have Novo's vast trial record. The evidence on how the drug behaves in patients who also carry other conditions, what the industry calls comorbidities. So Emcure's pitch to doctors is simple. This is the actual Wegovy, just at a more accessible price than the imported original. Cipla ran a different version of the same bet, and arguably the cleaner one. Rather than partnering with Novo on semaglutide, which is now copyable, Cipla partnered with Eli Lilly on tirzepatide, launching Yorpeak in India in late 2025. Yorpeak is Lilly's Mounjaro marketed in India by Cipla under a different brand name. The crucial difference is the patent here, because tirzepatide's Indian patent runs until at least 2030. So Cipla isn't fighting any generic competition at all. It's selling a still patented innovator drug at innovator adjacent prices into a country where Mounjaro became the second largest pharmaceutical retail product within a year of launch. Yorpeak's 14 crore in its first month annualizes to about 168 crores at the launch run rate. Small against Cipla's quarterly revenue, but it's still healthy margin on a molecule that is still on patent, while the rest of the industry slugs it out at near cost prices. Both Emcure and Cipla are making the same wager. Don't try to be the cheapest. Try to be the only one allowed to sell the real thing. Now comes the third bet. A third group accepted that they'd be launching a generic, but decided to win share through a better pen rather than a lower price. Zydus went the furthest here. The standard semaglutide regimen forces patients to switch devices as dosage climbs. One pen for the first 4 weeks at the starter dose, another one at the next level, another for maintenance. 3 different disposable pens over the first few months. Zydus built a single reusable pen with a 15 mg or a 3 ml cartridge that handles every dose. The clever part is what Zydus did next. Instead of trying to take share alone, it licensed the same pen to Lupin and Torrent under semi-exclusive co-marketing deals. 3 of the strongest sales forces in India are pushing the same differentiated device. And the numbers are striking here. Lupin's, Torrent's and Zydus generic injectable market in April 2026, 57% of all generic semaglutide sales in India, all of them flow back to Zydus Ahmedabad production lines. The device here was the moat, and the partnership with others gave it the distribution it needed. Sun Pharma's differentiation here was an auto-injector, a pen designed so the needle stays hidden and the injection happens automatically when the patient holds it against the skin. The same molecule, same dose, what changes is the patient's experience. Now comes the bet 4. Mankind Pharma did something none of its peers did. It launched a pen, then deliberately refused to compete on price, refused to launch the cheaper vial, and started pointing its energy elsewhere. Now, this is also a contrarian bet. The logic is when 50 companies are fighting over the same molecule at falling prices, the better business isn't winning that fight. It's selling all the other things patients on GLP-1 would also need. And the numbers suggest that the basket strategy is already working. Mankind's anti-diabetes portfolio grew at 14.4% in Q3 FY26, which is almost 2 times the market, excluding the GLP-1 launches. Chronic care now contributes around 40% of its domestic business. The semaglutide pen here is launched into an existing chronic care engine and not really into vacuum. There's a longer game behind it too. Mankind has a novel molecule, a small oral obesity drug in phase 2 trials in Australia. So nothing for FY27 or 28, but it's the kind of asset that can turn a defensive GLP-1 launch into an offensive franchise if it works. Then there's the next bet of exporting the molecule. For companies with international footprints, the Indian market is the appetizer. The main course is everywhere else the innovator is still supply constrained, which includes Brazil, Canada, the Middle East, and parts of Europe. Dr. Reddy's is the most aggressive here, with 26 GLP-1 products in the pipeline and a plan to launch across 87 countries. Different companies are betting on different geographies here. Torrent's whole international strategy hinges on Brazil, a market whose regulator and visa is so strict about semaglutide that pharmacies have to keep physical copies of every prescription. Biocon is going direct in Europe, selling its own generic liraglutide, which is an older GLP-1 drug, in Netherlands rather than through a partner. And it is also out-licensing semaglutide to Ajanta Pharma for 26 countries across Africa, Middle East, and Central Asia. Biocon's cost edge here is structural. The company spent years building fermentation-based capacity to make its peptides, rather than taking the more common route of stitching them together through a synthetic chemistry process. At scale, fermentation brings down the cost of active ingredient down from roughly $200 a gram to between $20 to $50 a gram, which is a 4 to 10x advantage rivals can't easily replicate. In a generic market that will eventually be priced like a commodity, that's the difference between making money and not. In September 2025 quarter, Biocon's generic business grew 24% year-on-year to roughly 774 crores, with margin on its biosimilars, which is near copies of complex biological drugs, expanding to 28% at EBITDA level. Lupin is leaning on South Africa and Brazil. Emcure picked up Quebec through a Dr. Reddy's partnership. Zydus is taking its differentiated market pen to 20 plus markets. The export bet has a cleaner economic logic than the domestic one. The innovator pricing abroad is still high, and generic competition there is very thin. So all of the analyst estimates largely talk about the export number here, concentrated in far fewer hands than the domestic chaos that exists here. And the final bet is selling the shovels. In any gold rush, some people decide not to dig, but they sell the shovels. In India GLP-1, the shovel sellers split into two distinct camps according to my observation. One is making the pens for everyone else, launching this year. The other is making the chemical raw material for the next generation of drugs, the one nobody has launched yet. Both businesses looks like more profitable than selling the generic itself. Let's talk about making the pens first. Semaglutide is honestly a very hard drug to manufacture. It's a 31 amino acid peptide. It is a chemically intricate chain that most Indian drug makers can't produce consistently at industrial scale. And even the companies that can make the active ingredient often can't really fill it into the pens themselves, because the cartridge fill finish process needs very specialized and isolator-based sterile lines. There are perhaps only 3-4 such facilities in the whole country right now. So a separate set of companies decided not to launch generics at all. They decided to make the pens for everyone who is. One source specialty pharma is the dominant player in this market. It's what the industry calls a CDMO, a contract development and manufacturing organization, a company that builds a drug end-to-end for others to sell under their own labels. And the pitch is exactly that end-to-endness. Develop the formulation, fill the cartridge, assemble the pen, serialize the box. And the scale is real here. One source has signed up more than 20 customers and has stopped taking new ones. Capacity is being scaled from 4 crore units in FY26 to 22 crore units in FY27. Its customers base holds roughly 2/3 of Indian generic semaglutide by value. Several customers have paid capacity reservation fees upfront. Others are on take or pay contracts, which means that they owe one source for the reserved capacity whether or not they actually buy the product. Gland Pharma is running the same play with cartridges. Capacity expanded from 4 crores to 14 crores in a year. 8 GLP-1 contracts signed and 6 or 7 more are in the pipeline. The neat thing about this bet is that these companies don't care who wins the Indian launch war. Whoever ends up selling the pen, it's in the end they who made it. The second part here is making the building blocks for the next wave. Once we go one layer deeper, the fill-finish CDMOs need cartridges. The cartridges need an active ingredient, and that active ingredient is a peptide that has to be synthesized from raw chemical pieces. That's where the second group of shovel sellers sit. Now, a quick definition here. A peptide is a chain of amino acids. Semaglutide, as I mentioned earlier, is a 31 amino acid peptide. To make this peptide drug, you take individual amino acids, chemically protect them so that they don't react in the wrong places, link them together in the right order, and then strip the protections off at the right time. That's too much chemistry, but just bear with me. The whole thing gets assembled like a Lego into a final drug. Divi's Laboratories made the most interesting choice here. It flatly refused to make generic GLP-1s. Instead, it sells the Lego pieces, which is the fragments and amino acids, to the original innovators like Novo Nordisk and Eli Lilly. So the economics here are very different from making pens. Divi's makes its own protected amino acids in-house. And let's just say it gives them a lot of control over the cost and the impurities in that process. It has also earmarked 700 to 800 crores per project across 3 new dedicated peptide units. And this custom synthesis already accounts for 56% of Divi's revenue. And the segment grew 23% year on year in Q2 FY26. The trade-off is clean here. The branded generics are scraping over fragmented Indian retail market, whereas Divi's is selling shovels to the prospectors who still own the gold mine. Newland is running a similar bet, but framing it slightly bigger. The global peptide CDMO market in its telling has gone from $1 billion category to around $5 to $6 billion in just a few years. And most of that explosion is because of GLP-1 success, which has made innovators want to develop the next generation of peptide drugs. Laurus Labs, Syngene, Pyramid Pharma, and Shilpa Medicare are all running variations of this very bet. Different scales, different positioning, but the same thesis. Don't bet on which generic semaglutide wins, but bet on the entire peptide modality globally over the next decade. There's another bet that isn't pharma at all. If millions of new patients go on very powerful weekly injections, somebody has to test their blood work. Diagnostic labs see the GLP-1 boom as a downstream opportunity. Metropolis Healthcare is most explicit about it. Whereas on the other hand, Dr. Lalpath Lab is less convinced, at least so far. A bet that's real but very small. A kind of thing that shows up in the numbers in next 2-3 years from now and not really next quarter. Beneath the semaglutide land grab, 3 Indian companies are quietly building their own proprietary metabolic drugs, ones that could end up mattering more than any other generic launch. Sun Pharma has something called utraglutide, an in-house GLP-1 molecule now in global phase 2 trials for both type 2 diabetes and MASH, a form of fatty liver disease. Mankind has a small molecule oral obesity drug in phase 2 in Australia. Lupin is developing its own oral semaglutide in-house and has partnered with Chinese companies on another GLP-1 drug. None of these reach the market for the next 2 to 4 years, and none of them move FY27 earnings. But they're only asset in the listed Indian pharma universe that could turn GLP-1 from a defensive franchise into an offensive one. And now a TLDR. Semaglutide came off patent in India on 21st March, and within a week, 13 companies had launched 26 generic brands. But the synchronized launch hides 6 different answers to the same question. How do you make money off this molecule? Most went into generic pen and split into price tiers. Emcure and Cipla skipped the generic fight and sold the innovator's own products. Zydus won by licensing a better pen to its rival. Mankind sat out the price war. Dr. Reddy's, Torrent and Biocon chased exports. One source, Gland, DV's Newland sold the shovels. The point isn't that everyone's launched. It's that almost no one chose to compete head-on with the company next door. Combined listed play revenue is still 100 to 130 crores a month. The real money is 2 years out, and most of it will be made outside India. That's my read after reading through all the con calls on how it will all play out in the Indian pharma space. I hope you enjoyed this episode. I'll see you in the next one.